Hello and welcome. You're watching Market Today on Business Today Television. I'm Sakshi Batra. Well, the stock markets are under severe selling pressure. You can see that the Nifty has now given up the 21,900 mark. 208 points is what the cut is looking like right now. 21,846 is what the Nifty is trading at as of now. All the sectors of the Nifty are down in the red, pulled down maximum by the pain points that are developing in the IT space. That's the index that's now down by 1.8% at the lowest point of the day. Oil and gas is down 1.74%. Mid caps are dragging 1.5% lower in trade. Realty is down by 1.4%. Healthcare, PSU banks, metals, small caps. There is no saving grace in terms of the sectors as we can find as of now, as all the sectors have slipped into the red. The stocks that are falling in trade and causing this downfall, well, you can definitely see it's TCS that's now down by 3% after the Tata Sons block deal that we've seen take place, and therefore you see severe pressure on Tata Consultancy Services that's pulled down the IT index with itself. Along with it, you also see heavyweights like BPCL, Nestle that's down in trade, Britannia. So the FMCG stocks are down. Tata Consumer Products, they are dragging in trade as well. Oil and gas, NTPC, Adani Ports, all of these stocks are down. Reliance Industries, let's look at that one too. 1.2% down for this one as well. Infosys is down in trade too. So TCS, Reliance Industries, Infosys, these are the kind of heavyweight counters that are contributing most to the fall in the markets right now. Let's welcome our guest on the show, Sunny Agarwal, SBI Securities special guest joins in right now. He's the head of research for fundamental research at SBI Securities. Welcome, Sunny. Good to have you with us on Business Today TV. But this pressure in the markets, how are you analyzing? Now the Sensex has dropped 600 points, 200 points cut on the Nifty as well. How do you really look at this current fall? Any 3 to 4 factors that you can point out which are behind this market fall right now?
Yeah, good morning, Sakshi, and thanks for having me on the show. I think market is slightly nervous ahead of US Fed meeting, which will kick off today evening, and the outcome will be seen on 21st. Basically, impact of the same will be seen on the 21st morning as far as domestic market is concerned. And at the same time, one thing is pretty sure that rate cut in US market is still away, and maybe June is the right time where we may see a rate cut. However, commentary from US Fed chairman will be one of the key monitorable. And I think ahead of that, slightly we are seeing a kind of sell-off in a certain sector. At the same time, today's outcome from Bank of Japan monetary policy. Basically, there also we have seen after a long time we have seen increase in rate over there. So after 2007, we are seeing that the interest rates are in the positive territory as far as Japan is concerned. And we all know that there are many carried trades which works wherein any institution which go to the Japan, raise the fund at a very negligible cost, and then comes and deploy in a riskier asset like emerging market, thereby generating a decent kind of return. I think that is something also to do with today's fall. And in addition to that, I feel that as we are approaching fiscal year end, 31st March, there are only few trading sessions which are left. So if I include today's trading session, I think 4 in this week and maybe next 3 in the next week, 6 to 7 trading sessions to go. So there are a lot of trade-off, profit harvesting, loss harvesting. At the same time, what we are hearing that at the many broking houses, risk department is trying to reduce the risk by doing a forced selling. So after a long time, we have seen a market is in a downward trend since last 6 to 7 trading session. And there also we are seeing some kind of forceful selling by risk department. And after all, having said that, we have already seen a massive rally in the India market from April 23 to Feb 24 period. And this is a kind of consolidation ahead of election. No trigger from the government end, as the model code of conduct is already in place. In addition to that, a slight negative sentiment is because of electoral bond, which has the development pertaining to that. So I think overall, if I have to sum up, I think this correction is a kind of consolidation. We may see such kind of consolidation move for the next 3 to 4 weeks. And maybe
But what is
once
the
they
kind
get
of downside that you're penning on? Like, how much more can the markets fall from this?
so Sakshi, as I was discussing with our technical team also, so I think the next support is close to 21,400, 500 levels.
Okay.
In case we breach 21,800 on trade. And post that 20,800, 21,000 is the kind of support which our technical team is expecting market.
Okay.
But again, having
Okay.
said that, it is not that it will correct at one go. Maybe 3 to 4 weeks is the right time where we may see such kind of consolidation. Yeah.
Okay, so some more consolidation in the offing over there, and then you can look at support levels now placed at 21,400 or thereabouts. The market severely under pressure, and of course there would be some nervousness around ahead of our Federal Reserve policy. Let's look at some of the stocks then and ask you where exactly is the saving place. I mean, are you looking at this dip to buy into the market, and if yes, then where exactly are you looking for a hedge, for a safe place?
Yeah, definitely. Sakshi, if somebody is waiting to deploy a fresh corpus or in the equity market, I think a gradual approach is one mantra which one can definitely
Okay.
adopt, wherein one can deploy his or her corpus over the period of next 1.5 to 2 months in the quality names across auto ancillary sector, because what we feel is that auto sector continue to do well, especially passenger vehicle and two-wheeler segment. At the same time, with the recent approval of electric vehicle
Yes.
ecosystem, I think there will be many few auto ancillary company which will emerge winners over the period of next 3 to 5 years. So I think auto and is a structural growth story if I have to take 3 to 5 year kind of view. So that is one sector to be in. Another sector which we like is manufacturing. Obviously, the way government is focusing on pushing manufacturing. So across the board, whether it is on electronic side, whether it is on cap goods side, you name any manufacturing sector, and then there are many quality names which are available there. Just to name a few large caps such as Larsen and Toubro is one of the company where we have seen a record order book. At the same time, there is a decent scope of margin expansion over there. On infrastructure side, companies which are focusing on roads and water segments such as NCC, Vatek, Wabag, all those companies can be on our radar. And at the same time, we have seen many decent sized mid-cap companies which have corrected in this rally. A case in point, Sula Wine, again, one of the market leader as far as wine markets are concerned. And we have seen a decent correction over there. PCBL, Philip Carbon Black, one of the market leader as far as the carbon black market is concerned. At the same time, they are diversifying by venturing into the chemical businesses. So there are many. Again, I think capital market as a theme is one of the theme which we like from a 3 to 5 year perspective. So whether it is a broking company, whether it is a trade settlement companies like CDSL, KFIN, or for that matter, companies like asset management companies or wealth managers like 361, Nuama Wealth. All these guys are offering a good opportunity to enter in the market.
Okay. What about JBM Auto? That company has won a large order worth 7,500 crores, and the stock has risen. In fact, it went up to even 9.5, 10 odd percent at one point of the day, and then saw some profit booking. But all this has come in over the last half an hour of trade. How would you look at JBM Auto prices? It went up above 2,000 odd levels too.
I think again, Sakshi, we are bullish on this space, which is into the basically electric vehicle bus manufacturing. So there are two key players over there, JBM and Olectra, which are a
Yeah.
standalone player. And at the same time, this piece of business is also in the Tata Motors as well as Ashok Leyland. So what we feel is that I think they have got a robust order book in hand, both the companies, whether it is JBM and Olectra. And
Okay.
for next 2 to 3 quarters, we will see an healthy execution. That is what we are hearing from the management. And hence, from an earning perspective, I think there is no risk as far as JBM Auto and Olectra is concerned. Again, buy on deep is a mantra because till the time market don't support overall equity sentiment, I think that this stock will again be in a consolidation mode. So I think buy on deep gradual accumulation is the right strategy.
Targets, any targets for JBM Auto?
Again, JBM, I think it has already run up significantly over the last 6 to 12 months from 400, 500 range to 2000, 4x
Yeah.
time. So I think if somebody want to take a view of 2 to 3 years, then one can expect a target of maybe 3000. But again, we have to see the delivery. So management is very gung-ho on delivering a robust pipeline over the next
Got it.
3 quarters. So let us take call post March quarter number.
Okay, fair enough. Let's now talk about the stock of the day that we've been watching even before the markets opened, and that is TCS. Now, we do know that, a block deal has taken place, and therefore there is some pressure on the stock as well. Tata Sons is expected to have sold shares worth 9,000 odd crore rupees, and this probably is being seen as Tata Sons bid to avoid the IPO, or to meet with the RBI guidelines as well. It's offered about 2.34 crore shares at a floor price of 4,001 in multiple block deals worth 9,300 crores, which is at a discount to 3.6%. Now, Tata Sons owns the bulk of 72.38% stake in TCS, and now it may be looking at dilution over here. How are you looking at this news flow really impacting the stock prices in the short to medium term, sir, now?
I think again, IT large cap tier one player, there is a kind of slight dilemma whether uh, the demand will be there or not as far as calendar year 24 is concerned. And to some extent, the demand is anchored to the US Fed meeting outcome also. The reason being that what I feel is that ultimately the majority of the business, all these companies derive from US and European market. And in case there is an healthy demand from there and discretionary demand, short-term demand, then we may see kind of earning upgrade coming for all these tier one IT player. So what I feel is that one should approach this sector again with an gradual accumulation strategy, trading at a reasonable valuation. However, right now Street is baking in a kind of single-digit earning growth as far as FY25 is concerned. And one important thing to watch out over here is whether the generative AI can reduce the cost significantly for all these large players. So recently there was a statement from SCL Tech that AI can can do the 70% of the work which normal human is doing. So if that is the case, I think then we may see some again cost saving measures which may come for all these large IT players. Valuations are reasonable. Growth is slightly, I mean, on a low single digit or high single digit kind of growth. Again, it can be a gradual accumulation. SIP mode is the right way to accumulate all this called dividend.
Okay. What about Reliance Industries? That stock is also constantly under pressure. In the recent sell-off, also the stock has slipped quite a bit, and now we see the stock down by 1.4%. It's given up the 2,900 mark and now is hovering around 2839 odd levels. How would you really look at Reliance Industries? Is this a good buying on dips move that one can look at?
I think today Reliance is under pressure because I think Singapore GRM, which has spiked up post Red Sea crisis during the month of December, Jan, and Feb, that has come under pressure, and that is putting pressure on all the refinery businesses. But having said that, the key trigger for Reliance is a demerger of retail and telecom business and listing of the same, and that is the main growth driver as far as Reliance Industries is concerned. So if somebody want to ride that demerger story, then definitely one can look to add a Reliance in a portfolio. However, right now, I believe that demerger is still 12 to 18 months away. So
Okay.
slightly the horizon has to be a longer one.
Okay. Your top two stock ideas that you're betting on this market downtick that one can continue to build positions in?
Yeah, so again, one stock which we like is Mahindra and Mahindra. The reason being that it's a OEM business, basically a passenger vehicle business. SUV portfolio continue to do well. Robust order book, production capacity is increasing. And at the same time, over the period of last 3 to 4 years, we have seen passenger vehicle profitability increasing above the main legacy tractor business and trading at a reasonable valuation. The core business is trading at 20 time price to earning multiple. I think this stock can be added with a target of 2200, 2300 over the period of next 12 months. And another stock which we like is Sula Wine, which we have discussed earlier on the show also. I think the stock has corrected recently, and with the two big overhang behind it, whether it is the subsidy which is linked to the state government policy. And yesterday also there was a case against Sula for paying 116 crore that has been put aside by the court. So that can again that has removed the overhang for the company. So I think Sula is one decent bet one can add in the portfolio.
Okay, M&M Sula Vineyards, we'll keep an eye out on those. Many thanks, Sunny, for being with us on the show and discussing with us all the key points in the markets that one has to keep in mind, the strategy, the stocks, and of course, which way are the markets going to be headed from here. Many thanks. Always a pleasure to host you on Business Today TV. Well, the markets continue to remain under pressure, although off the lowest point of the day, but still down by about 179 odd points on the Nifty. So you do have 21,877 right now. The Nifty Bank about 0.2% decline. It's the major index which is largely lower and led by IT, auto, oil and gas, those kind of sectors that are building up some pressure in the markets right now. But we'll keep an eye out on all the market trends going forward from here too. So do stay tuned with us on Market Today and on Business Today Television, as a whole host of videos will be up and running for you to really understand what is the mood of the markets.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
If you have been scouting for good IPOs that are coming up on the street, and also you are an ardent follower of late Rakesh Jhunjhunwala, then this video is something that you should be watching out for. Hello and welcome. You are watching Business Today TV. I'm Sakshi Batra, and in this video I'm going to be talking about Rakesh Jhunjhunwala's backed company Bazaar Style Retail, which has now filed a DRHP, that's the draft red herring prospectus, with the Securities and Exchange Board of India to raise funds from the public, and which means that they are going to be launching their IPO. And here's at least 9 points that I'm going to be sharing with you that you should know about this upcoming IPO. Bazaar Style Retail. It's one of the leading players in the value retail market in West Bengal and Odisha. Its other core markets and the focus areas include areas such as Assam, Bihar, Jharkhand, Andhra Pradesh, Tripura, Uttar Pradesh and Chhattisgarh. This IPO will be a mix of both shares of 185 crore rupees from the fresh issue and an offer for sale of up to 1.68 crore shares by the promoter group and the other selling shareholders. The offer for sale will include sale of up to 27.2 lakh equity shares by Rakesh Jhunjhunwala, up to 22.4 lakh shares by the Intensive Software, up to 14.9 lakh shares by Intensive Finance, up to 13.1 lakh shares by Chandurkar Investments, among many other selling shareholders as well. Now remember that upon the demise of the big bull Rakesh Jhunjhunwala, the equity shares that were held by him were transmitted to Rakesh Jhunjhunwala, his wife, and his nominee of all the shares that he has held. Now, what will happen if this IPO will come through? The net proceeds from the fresh issue of shares worth about 135 odd crore rupees will be used for prepayment or repayment of certain outstanding borrowings and general corporate purposes. Axis Capital, Intensive Fiscal Services, JM Financials are the book building lead managers of this issue. Link in Time India is the registrar of the issue. Now, the company would also be looking at considering a further issue of specified securities through private placements, rights issues, preferential offers and other methods aggregating to 37 odd crore rupees is what we are given to understand so far. Now, what is the company going to be doing? It's going to be utilizing the proceeds for repayment of certain borrowings, like I already pointed out, and the rest of it will be going to the selling shareholders, like we discussed for the OFS portion. Now, what is the financial status of the company? In the fiscal year 2023, Bazaar Style Retail reported a standalone profit of 5 crores. That was up from a net loss of 8 odd crore rupees in the previous year. In the same period, the revenue from operations also increased 43% to 788 crore rupees almost, from about 551 crores in the previous financial year. Now, as of December 31st of 2023, the company has 153 stores across 140 cities, and it's one of the leading players in the value retail market, especially in West Bengal and in Odisha. So those are the kind of details that I wanted to discuss with you as far as the IPO market is concerned, and this one could